Hey everybody, welcome. Thanks for joining us today. My name is Mike Gibb. I run accountsrecovery.net, and I want to welcome you to today's webinar where we're talking about how to prevent delinquent accounts from reaching charge-off status. Charging off a debt is something that nobody wants. For creditors, it means taking a loss, and for consumers, it means facing collection lawsuits or potentially negative impacts on their credit scores and access to credit going forward. So preventing accounts from charging off is the goal of any creditor servicing and collection operation. Improvements and enhancements with technology and artificial intelligence are making that process easier. So today in this webinar, which is being sponsored by Centrical, we've got a panel of experts here to break down the best practices in keeping accounts from having to be charged off and talk about the state of consumers' financial situations today. As I mentioned, this webinar is being sponsored by Centrical. Centrical, the AI performance experience platform, empowers debt collection agencies to run high-performance operations through adaptive, engaged, motivated frontline teams. The platform personalizes employee experiences with AI-driven performance management, coaching, quality management, personalized micro-learning, and voice of employee insights. Centrical's conversational AI assistant enables supervisors to coach teams more effectively, improving compliance and results. Recognized as a workforce engagement management leader by Frost & Sullivan and QKS, and most innovative solution at Customer Contact Week in 2025, Centrical serves customers in 150 countries across 40 languages, including Teleperformance, DHL, and Synchrony Financial. Let me introduce you to our panelists. Mark Bassler is a Vice President in Operations at U.S. Bank and manages consumer, small business, and merchant collection activities. Mark's been with U.S. Bank for 7 years after having been with State Farm Insurance and State Farm Bank for 20 years. Will Perico is the Director of Customer Success at Centrical, where he partners with leading organizations to drive employee performance, engagement, and results through technology-enabled solutions. With several years of experience supporting customers in the collections industry, Will brings a deep understanding of its unique challenges and opportunities. An experienced leader, he's recognized for solving complex problems by redesigning processes and connecting insights across business functions. His background spans storytelling, data analysis, sales, and customer service, and he's known for bridging the gap between technical and operational teams to deliver measurable impact. Matt Stiegel's been in the collections industry for 20 years now, with the last 15 at Vantage Credit Union. In his time in the industry, he was able to have a variety of roles in the areas of collections, repossessions, and remarketing, as well as bankruptcy. In his role as the AVP of Credit Resolution and Recovery, he oversees all credit union collections and recovery staff, processes, and collection vendors for the credit union, which has $1.1 billion in assets and serves the greater St. Louis area. Dave Wasik is a partner for Second Order Solutions, a leading credit risk advisory firm. In his role as partner, he focuses on collections, credit, and loss mitigation. As a partner for 2OS, he has consulted to many lenders in improving their credit and collection strategies and capabilities. He has led engagements with many large banks, specialty lenders, fintechs, and investors, both in the United States and around the world. Prior to joining 2OS, Dave was at Capital One, where he led collections and recovery for Cap One's card and personal loan business during the Great Recession, led Cap One's small business card portfolio, was one of a handful of senior credit officers. Everybody who's watching us live today is absolutely invited to ask questions and submit comments during the course of our conversation. You can use the chat or the Q&A to submit your questions and comments. If you would prefer to remain anonymous, there is an anonymous button that you can push in the Q&A. And if you do that, I promise you anything you send to us is sent anonymously. Okay, so let's start our conversation and sort of set the table for everybody today. Maybe we can talk about some of the early indicators that you're monitoring or tend to monitor or like to monitor to identify accounts that might be at the risk of getting to charge-off status, and maybe sort of what differentiates top-performing collectors in acting on those signals. Matt, you're at the top of my screen, so I'm going to pick on you to kick us off today.
All right. Yeah, so definitely keeping track of your loan portfolio health is important. So we're looking at members whose scores decline based on product line. We're looking at first payment defaults, early defaults into the loans. And then for my collectors that are good at preventing charge-offs, they are the ones that look for long-term solutions. So they're not just trying to chase the payment. They're looking for what's really going on with the member, finding out what the reason for delinquency is. Is there something that's going to be a long-term change for them financially, and solving to that instead of just chasing the payment? Because as everybody knows, if you're just chasing the payment, they're going to come right back to you in a month or two, because the situation's not solved and nothing's changed. So that's what we are definitely coaching toward and things like that.
Yeah, to build on Matt's point, I mean, there's never been more data available, both data that exists within our institutions, like delinquency, both on the loan in question as well as other loans they might have with the bank, deposit data, which I think is especially important for late stage customers. If someone's balance has been very low, then suddenly there's a meaningful inflow of deposits. That all of a sudden might take someone who would have a very low likelihood of repaying, and all of a sudden that puts them in a different range. Thinking about some of the external signals that you can get, you want to be cognizant of the customer's entire set of loans, both the loans they have on your institution as well as with others. It's important to know, for most late stage customers, they're going to be not just delinquent on your loan, but delinquent on most or all of them. But in cases where that you've seen payment activity on other loans that hasn't yet made its way to yours, that again, that's a very important signal to get across. And then totally agree with Matt that like getting them on the phone is only half the battle, right? You've got to then have the right solution. Otherwise, they're gonna pop in and out of collections, and you're only going to be delaying the problem, not solving the problem.
Yeah, I would just echo that, completely in line with what Dave and Matt said. I think one of the things that we have observed across our portfolio of customers within collections is that watching for early warning indicators, right, whenever possible. So the payment behavior changes, any communication patterns that change over time. And on top of that, what we have noticed in terms of what is common across our customers that are truly addressing these issues in a very upfront and proactive manner is to ensure that escalations are taking place appropriately rather than continuing ineffective approaches, leveraging multiple communication channels strategically, and ensuring that empathy is always a main concern, right? And another thing that we have noticed is speed to response. Whenever you're acting quickly and acting on those early warnings, you typically have a more likely chance to succeed.
Yeah, I mean, I sort on the, Mike, when you teed up the question, you used the term signals, and what we've been talking about mostly are the signals that we have to provide to the agents before the call, because there's going to be a bunch of information that is either not available to the agent or it would be cumbersome to pull while a customer is on the phone. I've always thought that really excellent collectors are good at two things. One is receiving the signals around what sort of reason for delinquency there might be, or broader like institution level information about all of the relationships that a customer might have with the bank. So they're good at receiving that information when the call begins, but then also just through establishing rapport and building a relationship with the customer, they're able to kind of take the information they've been given and make it more robust, right? Because even though the external data environment is getting better and better, there's no substitute for actually having a conversation with the customer. So I really like to see agents who react well, can kind of tailor their approach based on what they know about the customer, but then they're really good at listening well and probing to get even more information about how they can help the customer.
And Dave, I think that's such a good point too, because it also alludes to the fact that there's so much data today, right? And it can be overwhelming to assess all of that and identify what is truly effective or meaningful. So what we see from a technology perspective, right, especially within Centrical, the ability to intersect learning with performance and coaching, technology really helping drive the process through predictive scoring models, right? We have real-time risk scoring that is taking place while agents are on the phone or whichever channel you're servicing through, cross-portfolio pattern recognition, multi-channel approaches. And then on top of that, leveraging AI as another layer to really identify, and help the collector with suggested conversation starters, right? What is the customer risk profile and the history that can really support the collector throughout the conversation?
How do you differentiate between a consumer who maybe just forgot to make a payment and is a few days late versus a consumer who potentially lost a job or had some other life event and is now, going to be missing more, not just this payment, but more payments going forward without necessarily sort of jumping to a conclusion? You want to be proactive, I'm sure, but at the same time, you don't want to be presumptuous either.
Yeah, no, yeah, right. I mean, most of our conversation today has been about late stage. Generally, by the time a customer gets to late stage, you can forget for a few days, but you're not going to forget for a few months. And so, like these are generally the cases where the delinquency issue is really serious. On the case of, forgetful payers, especially with there being better and better like digital channels out there, outbound email, SMS, push notifications, et cetera. For a lot of those very early stage customers, the incremental value of making a phone call isn't that great, right? All they need is a nudge to say, hey, your payment's due tomorrow, or your payment was due 2 days ago. And that's all it's going to take to cure the delinquency. It's another case where having predictive models can really help, right? Because if a customer, oftentimes, if I forgot to make my payment this month, it's probably not the first time I've forgotten, right? So if a customer has a history with the institution of being a couple days late a few times a year, that makes you a lot more confident that, the next time it happens, it's going to be okay. The key is then, okay, if it's not just a couple days this time, it's 30 days, 60 days, 90 days, that's when you've got to quickly shift your plan.
And I mean, we see people all the time that use their grace period every month. So we know those are the people that's their pattern. So we don't tend, the talk off's different if you're actually talking to them. But I agree, you go frictionless for those forgetters and ones that need the nudge. You don't even have people power behind that. You just go your omni-channel, give them the nudge, give them the payment link. And then you can really quickly tell, especially in the credit union space, if they have a total relationship with you, if it's just their normal pattern or their habit. But if I do believe if you do end up having to talk to them, that providing, this goes back to solutions, providing them like, hey, did you know you can set up payment reminders in online banking? Did you know you can set up auto pay from an external or internal? There's different things that you can do to help yourself to keep that in line, because we're all so busy nowadays. You need those. I mean, I set 12 reminders a day probably for different stuff. So you need those reminders and those pushes. And then of course, encouraging auto pay and things like that is super important. But if you can get that part done without actually having to talk to them on those infrequent ones, I think that's super important and saves your organization time and money.
Yeah, auto pay that's a really good point. Like let's say there are two customers, one of whom is on auto pay and is 3 days delinquent, and then one of whom just makes their payment via check or via online payment and is 3 days delinquent. Like the first one's going to be a lot riskier than the second, right? Because if they're on auto pay and either they're overdrawn or the bank account is no longer valid, both those customers could have the same balance, they could have the same number of days past due, but one is going to be like way riskier than the other. And so that's why having like days past due and balance be like a starting point, but not the ending point, right? Because there's a lot of factors where, again, even for a similar number of days delinquent, you've got to kind of tease out who are the customers that you should be really concerned about, even if they're only a few days delinquent.
Okay. Question is coming from the audience, and I'll use this as an opportunity to remind everybody, if you have a question, by all means, drop it in the chat, send it in, or send it in through the Q&A. What types of actions or solutions do you find most helpful for people who are experiencing some financial difficulty?
So I think for us, I mean, if it's temporary, like they're out of work for a health issue for a short time, and we like to do extensions, put payments on the back of the loan for them, give them a little breathing room. If it's going to be long term, we try to offer like restructures and things like that. I realize that's a little more unique to the credit union space, a little easier to do probably. But those are the things that we're looking at is, do you just need to skip a couple payments? Is this going to be going on for a long time? Do you need to do interest only for a little bit? So finding that out quickly and upfront, and then making that process as painless as possible is super important because they're already dealing with enough. And then I think it's being clear with the information and the options that are available is super important. Having it easily accessible, having your employees understand it. We try to do regular outreach to our front-facing retail staff on a regular basis, make sure they understand all the options that are available because they might be the first person to hear from them. So I think it's important for your entire staff to know the options and provide those. And then the collectors have to be really well versed on, is this a situation where I should offer it or not? Or is this, I just need to give them a little bit more time to make the payment or a payment arrangement? Or is that not going to do it in this situation? So I think that's super important in your regular coaching and training and follow up to make sure that you're identifying when maybe they didn't do as good of a job at that, or they did a really great job, and say that, this is a prime example where you need to use those options. So I think it's about knowing the options and then making sure they're getting presented and educated well on them.
Yeah, I agree. I mean, some of it, of course, is going to depend on, what kind of loan are we talking about? Is it a credit card that you can use a re-age on, or is it a much larger loan where, some more kind of fundamental kind of program or fundamental changes to the terms are going to be required. But again, going back to the collectors, I think ideally the collector is both kind of methodical in asking the right questions to come up with ability to pay, understand what the right monthly payment will be for the customer. But look, this is a moment of truth for the customer relationship. A bank that can kind of help the customer out of a really difficult situation. This is a really important moment in what can be a many-year relationship. And so it's really important to get like the method and the questions right, but also do so in a caring way.
I think the only thing I would add to that, which is echoing what you both said, is the fact that I think it becomes more critical by the day that the collectors themselves understand procedures, right? What are the right mechanisms and the empathetic approach to customers. We also see now a trend of shift from volume to value, right? With AI handling most like basic requests, and now it's only truly the most challenging cases that are coming to the collectors to handle. So having them be able to approach that in a human empathetic way and understanding exactly what the options are, and also allowing the customer to understand what are the implications of whatever decisions they make, is a critical component for success.
Yep, I agree, Will, because you want your people to be your exception processors your more extenuating circumstances, the easy stuff that, what's my balance? How much am I due for? I just need to make a payment. Those are things that we can move away from people touching. So it's when you need to go the extra mile and get more detailed, 100%.
We've got
Yeah,
another.
one thing I might add just quickly is that I'm sure the lenders on this call have seen a big uptick in the number of enrollments with debt settlement companies over the last couple of years. And one of the things that I think the debt settlement companies do really well is it's very clear. Well, yeah, like they do a good job of celebrating success along the way. Congratulations, Mr. Wasik, you made your first payment. Congratulations, you settled your first account. Generally, collections letters, especially those related to repayment plans, kind of look like they should be printed on like a dot matrix printer, right? They're awful. And clearly there are certain compliance steps that you've got to take, but looking at this as again, we're relying on the customer to make the payment, but we're on their side, we're advocating for them, we're celebrating each step of the journey. I think that's one thing that the debt settlement companies have done that, frankly, the banks in general have been slow to adopt.
You want your brand to be consistent to a past due member, just like it is a member with $1 million on deposit. Your brand should be consistent, and their email should still have your full logo and colors and message and stuff like that. And if you're treating them differently, then you're not truly trying to preserve that relationship. So yeah, that's a great point. And you kind of hate when you have to do just the plain black and white, by law letter. It just doesn't give the same feeling that you're there to help. So that's a great point.
It really is. And I think the same concept applies to the collectors themselves, right? If you can apply a process in place where you celebrate their achievement, celebrate success and effort, you increase motivation, you increase their intent to do better. And with that, you're going to have a happier customer at the end of the day too.
Just taking notes. All right, next question that's coming from the audience here. For open-end line of credit products, do you have any insight or tips on what's worked for a product like this because of it being revolving? It's hard to avoid a cycle of debt.
Yeah, let's see. I mean, I think one of the challenges with a product like this, at least especially in the early stages, is the balance is moving. There's money being spent in addition to ideally payments being made. Since we're mostly talking about late stage here, typically any new draws on the line of credit would have been restricted at that point. So at least you don't have the sort of the moving target aspect of the balance changing every day. But in terms of the types of plans that are available, I think like directionally they're pretty similar as for the term loans. There can be, again, long-term workout plans, shorter term workout plans with some level of concession on rate, all depending on the amount of the balance and the amount that the customer can afford to pay each month.
I think too, it also depends on, it's again getting into the details of what's going on. If they're trying to pay down their debt and do away with it, or they are giving you a long standing situation that's going to take time to resolve, or is going to be a permanent change, like they're going to have to stop working and go on disability or something like that. I think that's when you're almost encouraging them to take the closure of the line so that they're not creating new debt. In most of our programs where we help on open end, we're stopping, even if it's early and they've never been past due, we're stopping the further draws to allow them the opportunity to get them paid down faster and get back on track. So I think you just have to kind of treat each one within your policies and procedures uniquely. For some people, it's not a good idea for them to close that line. Maybe that's the one they're going to keep. They're going to close their other credit cards. On the lending side, I think you're working with your lending people to see, are they eligible maybe for a consolidation instead and keep one open to use going forward. And also think it depends on what kind of line it is. If it's a large personal line, that's a little bit different story than like maybe a small overdraft line where it's just helping them not overdraft their checking and things like that. So I think it's very situational, but I think if it's going to be a longer term problem, you've got to keep them from spending more.
I think the only thing I would add to that is the fact that if it's a known issue in the organization, I think there's nothing better than being proactive and ensuring that you have the right enablement mechanism, right? The training programs that you're enabling your coaches to really be able to support the collectors when they are having those conversations. And leveraging technology to support that process as well, like simulations with AI components that allow the collectors to really go through that exercise and put it in practice with their policies and procedures in place so that you can validate they're doing the right thing would go a long way. Just make sure your workforce is ready to have those conversations.
Another question from the audience, and maybe this is the financial services equivalent of a Freudian slip, but the question is, what do you think gets the best bank? I think they meant bang, but the best bank for the buck in late stage delinquency? Would you say SMS or email?
Yeah, I'd maybe broaden it a little bit to also include push notifications, but I don't necessarily view it as an either or, right? I mean, emails and push notifications are so inexpensive that, given the probability of default of a late stage customer, like by all means, you should be sending out, frequent emails that vary in terms of the messaging and the look and feel of the emails, just so it's not the same message over and over again. SMS, of course, is more expensive, right? So being a bit more judicious with that. But again, especially in late stage where presumably you've already called them dozens of times before they've gotten there, like the phone doesn't appear to be, outbound phone doesn't appear to be working. And therefore, using these digital channels is I think a really important part of the overall strategy. One quick add to that is that I'm always surprised by how many late stage customers still log on to the app or log on to online banking. You would think that they would just have like disengaged completely, but they're not picking up your phone calls, but they're still improbably engaging with the bank. They're just doing it on their own terms. And so the more that you can put a lot of the functionality that we've just been talking about, qualifying customers for workout plans or for understanding settlement policies, the more of that you can do online. What I find is that oftentimes customers they'll shop online and then call in when they're ready to really engage and make the settlement or make the workout plan happen. It's a little bit like buying a car where you shop online, go to the dealer to buy the car. I think a similar approach ends up happening here. So understanding the digital engagement or lack thereof of your late stage customers, I think is a helpful step to take.
I think it's important too to develop a cadence. So if this didn't work, try the next kind and then keep rotating it. Obviously there's a lot more outbound dialing going on in late stage because you're trying to save the account. But I think a cadence, and then if you have access to AI that can analyze, okay, they usually open email at this time. It's probably the best time to send the email, so it's at the top of their inbox. This person never clicks on the text link, so maybe you switch them to more email and outbound call heavy. This person logs into online banking all the time, but never reads or looks at anything else you send them. Then maybe, if you have the ability to send messages through online banking, that's what you do with that person. I think that takes a lot of building your own internal data and data warehouses and things like that. So, but I think it's all about a cadence and meeting them where they want to do business, because otherwise they're not going to communicate with you until they're ready, or until they have to when something's escalated, which is what we're trying to avoid.
Okay. Let's see here. More questions from the audience. How much can we leverage CBR, which I'm going to guess means credit bureau reporting, but I could be completely off about that. How much can we leverage CBR while doing consumer collections?
How much money do you have? Because you could buy anything now, right? You could buy triggers, you could buy, soft hits that show you, their score dropping by the month or by the quarter. You can buy propensity to pay scores. And so I think it's about how much you want to spend and what blend works for your organization, your portfolios that you're working. But yeah, I think it's almost like a money game. But I know we have strongly moved away from pooling credit at all as a collection item until we're, considering another action or have another stronger permissible purpose. So I think you're better off purchasing the stuff that doesn't hit their bureau hard and stuff like that. And that maybe is giving you more of the information you want to see, as opposed to, going through scores and trade lines and stuff like that.
Yeah. It's for me, it's a trade-off of like where do you want your what do you want the superpower of your collections organization to be, right? And during my time at Capital One, that was the thing that we focused a ton on, was building a suite of models, applying the output of those models to as many different use cases within collections as possible. So the amount, the cost of the data is real, but we've generally felt like it was worth it for the portfolio that we were leading, and for the just how we wanted to engage with our customers. But I think different banks just approach that question differently.
Next question from the audience. How do you deal with a consumer who depends on a debt consolidation agency that has not reached out to our company? Should the agent attempt to educate the consumer concerning this means of debt resolution?
This is one I'm passionate about personally, because we've been, I think Dave mentioned it earlier, we've been hit with the influx of debt settlement proposals and power of attorneys lately, especially over the past, I would say, 24 months. As long as the POA we receive is not also a cease and desist, we are going to try to educate, provide other alternative companies like debt management instead of debt settlement. Our own internal programs is an option. Anything to save their membership, because especially if they're a full service member with us that's using, deposit services, they have several different loans, credit cards, things like that. We don't want to lose that relationship over settlements from them causing us losses. So we try to really, if we're able to and not banned from contacting, if we're able to get a hold of them, we really want to educate and discourage, offer other options. And I am sure everybody is fully versed in, you'll get the POA in January, you won't hear from the company till July because they're building up the escrow to settle. So we try to, during that period, reach our own member and try to head that off. And we will quite frankly try to talk them out, withdraw from the program. And then we are also usually proactively contacting the company. But we've also, the last thing I'll mention is we've taken a stance of if they're active, non-charged off account for us, we usually do not settle or work with them. So we only usually work on near charge off or charged off accounts, usually with those companies.
Okay.
Yeah, I mean, yeah, that's been one of the, I mentioned earlier, just the rapid increase in debt settlement enrolls. A lot of that growth has come from customers who are either current or in very early stages of delinquency, where, again, no bank is going to be very excited about settling for customers who might not even be past due yet. So it's a difficult conversation, and I think Matt nailed it. Like there is a much greater use of letters of notification or powers of attorney compared to cease and desist than there was 10 years ago. And so making sure that your policy and your strategy distinguish between the two, and continuing to reach out and try to support the customer and educate the customer as long as it's a letter of notification is a definitely good approach to take.
Will, you said something earlier that I wanted to circle back on. You mentioned, and I wrote down, real-time risk scoring, and wanted to maybe know just a little bit sort of about how that works and maybe how agents are using that to kind of help them guide them during calls.
Yeah, absolutely. And glad to speak a little on that. So essentially, we have some customers where we're bringing KPIs, and now with the availability of data, we're making the collector aware of as many metrics as possible, right? So having platforms conduct this, the risk scoring and categorizing the level of risk for the organization has been a really driver for change. We also see some of our customers, allocating their collectors in value at risk groups, right? So you have more experienced tenured agents dealing with the more complicated cases and so on. So I would say technology has been overall a great enabler for just overall a better matching between the cases that you have and the collectors that you have to support them. But I'm curious to see what both Dave and Matt have in terms of what they might have applied in their day-to-day and how this may be benefiting them as well.
Yeah, I especially for larger organizations, the idea of kind of stratifying somehow, like value at risk queues, or again somehow adjusting kind of the cadence and the frequency of outreach based on those risk scores, I think is a great practice. Sometimes you've got enough agents to actually have separate queues. Sometimes it needs to be more centrally managed within the dialer. But again, especially in late stage, where the chance of just getting someone on the phone, let alone getting a significant payment, is just getting lower and lower with each new day of delinquency. Being wise about figuring out who to put your kind of scarce resources against is a really important aspect of it. And we've been talking throughout this webinar about just the difference in circumstances and difference in collectability between early stage and late stage. And if that's late stage pre-default, then the kind of post-default recoveries world is even a different time horizon. But having the risk models, Will, that you're referring to, not just be like a day 1 of delinquency model or a day 60 of delinquency model, but having different models using different variables and data elements at different stages of delinquency is I think a really good practice, because over time, as the customer gets more and more delinquent, like everyone's high risk at that point, right? So it's a matter of who can I get on the phone, and who are the customers who might have a sudden change in circumstances that all of a sudden makes them much more open to having a conversation and making a payment than they were 30 or 60 days ago.
With respect to collectors, I'm sure the AI and the technology is important, but are there other training that collectors should have to sort of identify early warning signs? Are there particular phrases? Is it a tone that you're listening for from the consumer? What else can you sort of do to kind of coach collectors to try and make sure that they're not missing any of these potential early warning signs that a consumer might be consciously or unconsciously giving during an interaction?
I mean, I think for us, it's because we're also trying to maintain a relationship, because it's so much harder to gain new members, and it's all about listening to the tone, the empathy that you show, the questions that you're asking. You, it's we are always, trying to get them to listen to the things between the words, because you can hear when somebody's voice is starting to shake because they're under so much stress. I mean, and then now we have tools that we're installing where we're getting call sentiment that's picking up on the tone and the success and the overall mood of the call. I think that's super important. And I think it's really important that it's not just something you have and you look at it later. Somebody throughout the day should be actively watching. And if you're seeing one person's call sentiment going down, or even during a call where you can maybe barge in and listen and see what's going on and offer tips and whatever, or say, hey, we try to do this to turn this call around. I think that's super important, because we all know that might be the last time you talk to them, right? So I think the reading between the lines is super important, but you have to use the tools that are available, which is your call sentiment, your common reasons for delinquency, your common call dispositions, analyzing that and see if you're catching on to something. And during your coaching sessions, if it's one thing that you're seeing frequently in a certain amount of time, you're coaching toward that to try to provide solutions for that item. And then when you're localized like we are, if there's an employer that's getting ready to lay off a bunch of people and stuff like that, like making your collectors aware of that, so that the instant they see when they get that account that they're employed there, they know that's a different conversation because of what they're about to go through or they are going through. So I think that's super important to know your market and your member as well, for that kind of stuff. But the call sentiment's huge now, I think.
Yeah, I mean, knowing a little bit about Centrical, I'm eager to hear Will's take on this, but there's just so many interesting tools available when it comes to supporting agents, as Matt said, analyzing call sentiments, helping the agent become more efficient in things like after call wrap up. I mean, we've come so far in the last year, but I still feel like we're in the first inning of a 9-inning game. And like with a lot of things relating to technology, I don't think that the robots are going to be managing our collectors anytime soon. It's going to be like, how do excellent call center leaders and call center managers use these tools in their coaching and training and ongoing support because I mean, there's certain things that AI can do that like the best call center manager will never be able to do in terms of just dealing with that kind of data at scale. But the insights generated by the AI tools combined with a sense of, you know, leadership and caring and empathy for the collectors, I think that's where we're gonna end up. But it still requires institutions and agencies to invest heavily in these tools, right? Because the efficiency gains are really obvious. The effectiveness gains are, I think, becoming more and more clear. So it's a really exciting space within collections right now.
And Dave, I think you and Matt were both on point, and I think what we have seen is, again, is a shift from, you know, the typical metrics, right? Focus on average handle time, third-party contact rates, and now migrating more into giving focus to quality-based metrics, right? Whether that's the sentiment surveys, the voice of customer, but all of those really equip the collectors to be ready and understand their own trends and kind of how they can improve. I think what we have seen specifically with Central in what pertains to learning is the ability for you to create dynamic learning paths, right? So a collector that falls short on a voice of customer or any type of sentiment assessment, automatically being given content that they need to improve, whether it's on soft skills or any type of negotiation, empathy type behaviors, and then supplementing that with visibility to the manager, converting the supervisors into truly coaches where they can get this data and act on it, right? So I think another thing that we have noticed is that because it's becoming more challenging on the collector side, right? They're dealing with more complex, more complex situations on the customer side. It's also to be expected they're going to experience more burnout, frustration, right, and decreased confidence overall in their job. So how do we make sure that person doesn't feel demotivated? How do we still encourage them to keep going and celebrate not only success but also effort, right? That you are on the right path, you're improving upon your prior performance, and leading the person, giving the person confidence to know that they can do better.
Yeah, as many people, as everyone on this call knows, like these collector jobs are really hard, and they're getting harder because of, you know, there's just more and more people, or, you know, more and more call blocking technology. There's more and more, like, our phones are getting better and better at filtering out unwanted calls. Fewer and fewer people are using home phones. It's just, yeah, it's getting harder and harder. And, you know, we talk a lot about customer experience. And I think alongside that is the collector experience. And the collector experience is, yeah, getting more and more difficult with just fewer and fewer arranged payments, fewer and fewer right party connects. It's never been an easy job, but it's getting harder for sure.
So that just opens the door to the question, how do you keep the collectors motivated then? Is it all about sort of the commission and the financial upside, or are there other ways that, you know, creditors or collection agencies or whoever is employing collectors, you know, any tools or ways that they, you know, what the things they should be doing to motivate collectors?
I think we kind of have the uniqueness of in our shop. We're not just collecting, we're doing several other tasks because things are so condensed in our space, but let them do different types of work on different portfolios. You know, the money does help. So that could be an equalizer at times. But I think and then you've got to celebrate the successes, because like Dave and Will were talking about, the successes are less by the day sometimes. And there's, I mean, days where they're leaving nothing but voicemails, right? They're not talking to anybody. So I think having those breaks and different things that, you know, celebrate the wins, and then also, you know, not just always focusing on what they could do better, but what they did good already is important. And I think providing them other resources and outlets for training besides yourself is important, because your voice can get stale and things get stale inside the walls of your organization sometimes. So you've got to seek outside training and information. I think that's super important. And then just general appreciation as much as possible is super important as well, because it is a thankless job at times. And you've got to buy shelf space for them across your organization, especially if your organization does a lot of different things. I think that's important too. So they know you're fighting for them in the rooms that they're not in and things like that.
Yeah, I would echo what both Dave and Matt said. And I think for a lot of what we work with in Centrical is how do we drive collectors and managers to continuously feel motivated, right? Whether that motivations is intrinsic or extrinsic, it's always what we're tailoring for. So again, it's kind of how to celebrate those, to Matt's point. Every time I meet my goals, every week I meet my goals, I am given a badge, right? It is automatically celebrating that achievement. On top of that, we give the opportunity for the supervisor to go and celebrate more discretionary, right? So we also try our best to celebrate improvement upon your prior performance, right? Because collectors might not be on their target, but as long as they're trending in the right direction, that in itself is cause for celebration, right? And it should be identified. Increased motivation drives them to want to do better. And ultimately, that all moves the needle for the entire organization. So, we keep exploring ways. How do we motivate not only top performers, middle performers, bottom performers? How do we give them the mechanisms to improve upon their prior performance and feel like they are it's all a matter of you perceiving as you're mastering your skills, you're evolving in your journey, and getting more confidence for the next call.
Yeah, and I know that oftentimes collectors and call center leaders might view AI as a threat. On this particular issue, like it can actually help, right? Like if after call notes are being automated, that just allows the agent to get back on the phone, making the next call as quickly as possible. If they have a co-pilot that allows them to quickly serve up the information that the customer is asking about, that then allows the agent to be much more responsive to questions that the customer is asking. So again, AI is sort of this boogeyman out there, but I think for a lot of the tools that that Will has been talking about and that Centrical offers, it can actually be a win for the agents as well as a win for the bank.
Lets them spend more time focusing on the wins and not doing busy work, right?
Yeah, yeah.
Yeah, and I think it's also worth thinking about how that impacts the manager, right? If you're a supervisor and before you had to digest so much data, just finding who your outliers are, whether for recognition or remediation purposes, was a challenge in itself, right? And now we see AI supporting managers, right? So you still have the human contact, the human intervention, but it's backed up by data and it's backed up by a much quicker analysis. So we're helping managers save time while being more effective managers at the same time.
We're just about at the top of the hour. We've got just a couple of minutes left before we wrap up. So what I want to do is go around the panel one last time. And what I'll ask each of you to do is, excuse me, you can have a choice. You can have one of two options. Option A, if there's a most important takeaway that you want people to remember from today's conversation, you can share that. Or if you're feeling a little bit more, professorial or masochistic, if there's homework that you would assign to everybody, if you think there's some task or some function that everybody who's watching should do based on everything we've talked about today and looking at the questions that came in from the audience, you can assign homework to everybody, but we'll give you a chance to sort of have a final comment that way. And we'll start with you.
All right. I think this kind of permeated all of our answers, but I think the AI human partnership is a critical component for success and continued success in a more challenging industry. And anything that we can do in terms of proactive prevention, right? Assessment and prevention would drastically help get the right collector with the right information at the right time.
Excellent. Thank you. Dave?
I'll be professorial, I guess. Dr. Wasik suggests go back and go get your hands on the emails you send your customers, the snail mail letters that you send your customers, not just the kind of glitzy ones that are colorful, but all the ones that are compliance related. And to a point Matt made earlier, ask yourself whether if you were a customer in late stage collections, would you respond to this letter positively? And is this a good reflection of the brand that your institution wants to put forward?
Excellent. Thank you. Matt?
I guess my two things would be hit them early and often in the right manner. So tailor your communications to how they want to do business and embrace the technology because you're going to get left behind if you don't.
Excellent advice, Matt. Well, Matt, Dave, Will, on behalf of everybody who's watching and listening and walking away with, I think, a much better appreciation and understanding of sort of how to treat these types of accounts and, ideas on what they should be doing with them. Thanks to each of you for being here today. I know we all very much appreciate each of you giving of your time and your expertise. So thanks to the panel. I also want to thank Will and everybody else at Centrical one last time for sponsoring today's webinar. Please check them out at centrical.com. There's also a link in the chat that you can click on to visit their website. Thanks to everybody who's watching. Thanks to the audience. Always appreciate you making us part of your day. If you're watching us live, we're back on Monday where we're talking about consent, how to how to get it, how to obtain it, how to manage it, what to do when it gets revoked. If you haven't signed up for that yet, it's going to be a really, it's a great panel. I encourage everyone to sign up. You can find a link in the chat, or you can find a link on the events calendar at accountrecovery.net. So we'd love to see you back for that on Monday. Until then, have a great rest of your Friday, everybody. Have a great weekend, and we look forward to seeing everybody soon. Thanks, guys.